Welcome, everyone. Kevin and I are back with another episode of Financial 15. Today, we're talking retirement spending. How much are you going to spend in retirement? It can be a little more of a complicated question. We're going to go through a little bit of data, help you determine an answer. You want to stick around.
Yeah, this is definitely another one of the questions that we are very often asked is how much you'll spend. Goes along with a few other options as to how much do I need and things along those lines. But we're on this topic today. If you want to find any of our other topics, please go to our site at beckerorr.com. Please go to our YouTube channel, subscribe, lots of good stuff there, or like us on Facebook. We're always happy to take a look at everything that way. But for today, we are just going to designate ourselves on Clint. How much are we going to spend, or will I spend when I'm in retirement?
Absolutely.
I'm closer than you, so you got to let me know.
Okay, gotcha. I'll give you the details here. You mentioned it in the intro there. It's very much related to this question, how much do I need in retirement, right? They're clearly linked. What you need is probably going to be similar to what you end up spending. But we're going to go through a bit of data, give you the picture of a typical Canadian retiree, something you can help use in your situation. So let's start with that. We'll pull up some information here. This is from Statistics Canada. They look at the Canadian Income Survey. It came out in 2021, but the data was actually collected pre-pandemic. So data was collected in 2019. How much will I spend in retirement? Well, according to the data here, the median after-tax income of senior families, and they define senior as one of the highest income earners over the age of 65 for the household. So senior families, median number 61,200, or roughly $5,000 after tax per month. So that's the starting point, right? That's across Canada. That might not be for your specific situation, but across Canada, well, $5,000 after tax a month is a median after tax retirement income for Canadians. That's a starting point, right, Kevin?
Yeah, I mean, that's basically what it is. I mean, depending on where you live, it could be substantially more that you need or things along those lines. Toronto, Vancouver, probably a little more. Yeah. Regina, Halifax, maybe a little less, depends on what it is. But again, the thing that you've noticed on the bottom there is that it does not distinguish between folks that are 65 and retired and 65 and working. And that's a fairly important scenario at the end of the day, because there are many more people nowadays that are continuing to work over 65, whether it's part-time, whether it's full-time. Whether they need that or not, something to do. So again, this is sort of an average number that we're taking a look at. There are a few tweaks to it, but I think it's a good starting point to figure out exactly how much you really will spend in retirement if you're dealing with it the way the average person is.
Yeah, so it gives you an idea what the typical retiree in Canada spends. We'll look at some other information here. So where does that money go? So that's the typical number. What do they spend it on? So again, Statistics Canada here, this is consumption patterns among aging Canadians. And you got folks, two columns. You got folks in the early 70s, so of age in their 70s compared to individuals that are in their late 40s. And you can see the difference in the consumption patterns, right?
Yes.
The two key ones I think I'll highlight here. You can see the amount on the other category, and others really recreational spending, the non-essential stuff, the fun stuff for most cases, that goes down. And then the amount spent just on maintaining property, houses, cottages, utility rent, all those fun things, that one goes up as a percentage. You can see where that money is allocated changes as you get into the retirement years. Any surprises there for you, Kevin?
No, I mean, I guess in some aspects you would assume that when you're retired, you have more time for physical activity and spending and a lot more of the recreational scenarios that are going on. But yeah, you're finding that there's less and less of that tends to be happening. So again, I believe it when the clientele we've seen beforehand, they have cottages, they're spending it out there, they're spending their money there. They're at home, they're up fixing, they're upgrading and everything else. I can see a ton of their money going there. And yeah, I can definitely see things along the lines of possibly transportation coming down because you're no longer driving to work anymore. So if you're not driving to work or you're not maintaining the bus getting there, that's going to be more money that you have to put somewhere else. But yeah, I think some of this fits completely with the way that the retirement system goes. But there are a few surprises, I think, that are ones that I would have looked at a little differently.
Yeah, I was surprised the recreational number is actually a little lower, like you mentioned, but the residence one makes sense to me. I mean, at least here in Manitoba, we see quite a few folks retirement. Maybe they want to live with a cottage now, so they might downgrade their current home. They spend a lot more time with the cottage, but then they got to fix up the cottage. So I could see those expenses going a little higher in retirement. That seems to fit with my day-to-day experience. But the recreation one was a bit of a surprise. We'll move to a little more data. So we looked at how much the median Canadian would get in retirement, that kind of $5,000 after tax figure, where that money is going, the breakdown here. Last bit of data, and this comes from David Blanchett as well as the Morningstar Investment Management. This research paper was published. It was published in the Journal of Financial Planning, and they looked at a lot of data, but what they looked at intentionally for this here was the change in consumption throughout the retirement years. So what David Blanchett did here is he looked at the data and then made estimates of spending curves. So what would the spending curve look like for 25,000, for 50,000, for 100,000? So different spending levels in retirement across the board. He found that the consumption pattern a little higher initially, drops in the mid-retirement years, and then picks up again in the latter retirement years. It forms that U shape, or what we call the retirement smile. That seems to fit, doesn't it, Kevin? That seems to make sense to you?
Yeah, I think it's perfectly sensible. And again, I mean, some of this, that's why I say the numbers that we just had beforehand, we were seeing that on recreation and everything else, is a little bit of a surprise, because my assumption would be sort of that 60 to 70 timeframe is when we see people, they've still got their health, they're still doing things. So there's a little more travel that's involved in that. So that's why I think you've still got that high number there. After you get sort of that 70, 75 age range, you're probably finding that insurance costs to travel are a little bit more expensive. Your mobility may not be the same. So you start to see that curve go down a little bit all the way through into your 80s or your early 80s, and then it starts to swoop up again. And a lot of the time, the reason that happens is all of a sudden health becomes more of an issue and healthcare costs start to rise. So you're back to that sort of 60 to 70 spending that you had beforehand. That would be sort of a quick, simple scenario as to what might be happening on your retirement smile. Though each person is different as to the way they're going to deal with that, aren't they?
Yeah, I think the actual level will differ by person, but I think the pattern would be relatively consistent. I mean, unique factors in every case, but that pattern seems to make sense. Spend a little more in the early years, probably take a pause in the mid years, and then the latter years when you have healthcare costs, perhaps assisted living, other medical items kick in, you spend a little more. I will mention when people do financial planning, and we do this as well, it's a conservative assumption, but often assumptions will use a spending level here and say, well, what if we just maintain that flat amount the whole way through?
Yeah, exactly.
And that way, if the plan fits with a flat income, well, that means we'll probably have some surplus, because in those mid years, it might actually dip and you'll have a little extra. That's typically how financial planning calculators work. That's how we normally do it. It's a conservative assumption, but something to bear in mind. If you're getting a financial plan, likely they'll assume a flat amount of income the whole way through, as opposed to that dip, which means you'll probably end up with a bit of surplus, because often consumption patterns do change in retirement. So we looked at some data here, Kevin. We looked at a typical Canadian, said, well, right, how much money do we normally get in retirement? That roughly $5,000 after tax. Where is it spent? According to the data, less recreation, more on property. And then how does that spending change over time? And that's the retirement smile we just talked about. But apparently everyone's different, right? Well, you have a unique retirement. You need a plan for your unique situation.
And that's exactly it. And as you mentioned, that sort of thing, we always use that sort of a flat line to predict the same level every time. I mean, we can change it, but it's easier if you do. Clint says you're probably correct in the fact that you get a little bit of a surplus. So if you are a grandchild visiting grandma and grandpa between sort of 75 and 85, you're going to get bigger gifts than you will in the early years or in the latter years, because they need that money then. So that's the time to go and visit. Make sure you're really thinking about that and go from there. But yeah, each person's a different individual. So how much you will spend may vary depending on what your likes, your needs, and what your resources are going forward. But we wanted to make sure that you have sort of an idea as to where the average Canadian is, and you can sort of plan around that, saying, if that's where I fit, these are some of the things I should be looking at.
Yeah.
Anything else you want to add, Clint?
Yeah, a parting tip for folks, a starting point to try to determine your number. We always say start with your current budget. Often the lifestyle you lead prior to retirement is pretty similar to the lifestyle you lead in retirement. So if you start with your current budget, and then you can make some adjustments. You can ask some questions. Am I going to travel more in retirement? Well, then I'll have to adjust that part of my budget. Are the kids still going to be at home eating all the food with a big food bill? Well, maybe.
Yeah.
Or you could adjust that part of the budget. And then the same thing with debt and mortgages. You can kind of go through the questions and see, well, what adjustments do I have to make to my current budget to have a realistic idea of what I'll spend in retirement? So that's a good starting point. You get the data for a typical Canadian retiree, and then we encourage, if you want to determine your own plan, start with your current budget and then make a few adjustments. That seems to be a good starting point there. Any parting comments for the folks, Kevin?
No, I think that covers everything that we wanted to touch base on. Again, if you want to know more about this topic in particular, or any of the other ones we've talked about, how to calculate a financial plan, how to deal with figuring out what your retirement budget might look like, please get in touch with us. Chatwithclintonandkevin.com. It's on the bottom of the screen, or go to our website. We're more than happy to answer any of the questions you have coming across. But again, we just want to make sure that you're getting the information that you need. If there's anything topic-wise that you'd like to know, also let us know that, because we'd be more than happy to film a video and see what goes on from there. I think we've done a fair amount with the spending in retirement for now, and I'm not retiring just yet, but I know it's a Friday, so I can take a small retirement on the weekend.
There you go. We can all take a breather, and we'll be back again soon with another video. Everyone take care.
Thank you.